Hi, today our topic of discussion or explanation is internal control and cash. The main topic is internal control and cash. As you know, we are discussing the financial accounting, introduction to financial accounting. So the topics I'm going to cover is starting from the very basic of how to record transactions and then how to make adjustments at the end of the accounting period. Then we start discussing the financial statement in a way that we discuss items in our balance sheet, and the first most important or the first item appearing on the asset side of the balance sheet is cash. So today we're going to talk about cash, and similarly going forward going to cover all the main items of a balance sheet on the asset side, and also going to talk about the liability side and the owner's equity or a shareholder's equity. But at the same time, we also discussing in the impact of that item on the income statement. So this is the way that we're going to move forward. So let's start with the first item you can see, or first account we can see on our balance sheet is the cash and cash equivalents. So out of these current assets, the most liquid, or in fact the liquid itself, is the cash. So I divide this whole topic of internal control and cash into three parts. In the first part, we're going to talk about the describe fraud and its impact, and explain the objectives and components of internal control. Because cash is such an item that can create the incentive for the person who has any malified intention to steal or to misappropriate or misrepresent or embezzlement. So that's a point that we have to take a very special care, or consciously we have to create a system so that the embezzlement or the theft or the stealing of cash is not possible, because the cash is the thing that we cannot trace back the transactions very effectively. Like if it is a banking transaction, or if it is a transaction through the books or through a channel of banking, it is traceable. But if it is someone stole a cash, so there is no traceability. So that's why we have to be more vigilant. Now, before going into detail about the internal control systems, we have to define what is fraud, because in accounting, the main objective that is that we have to develop a system and we report the things that is free of frauds, or that is no any misrepresentation. So how we define the fraud in accounting, that's an intentional, that's a word very important to note, intentional misrepresentation of facts. So if it is intentional, if it is by mistake, then it is not a fraud, it is a mistake. And mistake can be rectified. But if it is an intentional, then it is a part of a fraud. Misrepresentation means that if you report anything incorrect in your financial statements, that is one type of a fraud. So we have to be careful. Misrepresentation of a fact in any situation is a fraud, but in financial situation we have to misreporting of assets, incomes, liabilities, or anything which we are representing in our accounting system is called as a fraud. The second condition for this fraud to be a fraud is the causes injury or damage to another party. If you write something incorrectly and keep it in your drawer, then it is not a fraud. But fraud is going to be when you use that misrepresentation or misappropriation to 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 injure or to damage someone else, or to steal their assets. Means that you are not the owner, but you unintentionally represented by misrepresentation. You pretend that you are the real or genuine owner. So this is the way that that it should have an effect. Otherwise, if it has no effect on anyone, then it is not a fraud. It's a right. You write can something, you do something, the act which is not hurting others, so then it is not a part of a fraud. Large problem that increases each year. And this is also very tragic, tragic in the sense that as the world is growing and expansion in the financial terms, or a lot of innovation, but at the same time the frauds are also increasing. So evil minds are also working at the same time when the genius minds are working. So there is always a war between the genuine people, or the honest people, and the evil people. So that's a but again, we see that as the technology is improving, the safeguard for monitoring or controlling the internal the control assets and the other things of the business, but at the same time the frauds and the criminal activities is also increasing. So we have to be very careful. Now there are two types of fraud. One is a misappropriation of asset. It can be the employees steal assets from company in shape of a cash or in shape of any other product. We can define it as an inventory, like some workers are stealing something from Walmart, Superstore, or anything. I think that is also called as a misappropriation of assets. False expense report. Sometimes the people travel on behalf of the companies, or do something on behalf of the company, and later on they submit the report that I did this much expense for that the for the corporation he or she is working. So by this way they reimburse that money, but if it is not correct, if it is overstated, then it is also misappropriation of assets. On the other hand, there is a fraudulent financial reporting system, like and that's very common in the corporate world, that people are misreporting something in their financial statements. Managers make false entries to companies appears more profitable, and deceive investors and creditors. So the objective of fraudulent financial reporting is that they want to mislead or misguide the investors as well as the creditors for the corporation. Now, why the people do fraud? So, if this triangle explains the rational, or you can say that the logic, or that. So, fraud is, as we mentioned, it should be often intentional. So, there is a motive that they want to get money, or they want to get promotion, or they want to get a bonus. So all these reasons can make them to misappropriate or represent like a fraudulent financial statements. So the objective is to get benefit, or to get something which is not in a genuine way you can get it. So this is the motive. Now, when definitely if you do this, if you have an opportunity, without opportunity you cannot. So like if someone of us is saying that I want to make misappropriation of the assets of any company in which I don't have an access, I want to fraudulently or misrepresentation of their financial statement. No, that's only the accountants, or the people who are working in their accounts department can do that. So that's a opportunity is available. So motive is there, that they want to get something which is not, which in legal way or a genuine way he or she is not entitled to get it. And the second is that there is an opportunity for that. So if there is a motive, there is an opportunity, then that human as a human being, we have a nature that we don't like these fraud, or these, because inner conscious of the human being always tell us that this thing is correct or this thing is incorrect. But in order to satisfy this inner sense, that we create a rational, we call it as a rationalization of a fraud. The rational being this, that I am doing this in order to I promote my business. I am doing this because I want to teach a lesson to my employer, who is a very mean person. I am doing this because whatever the money I will get, I will distribute among the poor people, like a Robin Hood type scenario. So rationalization is the create a justification or create a reasoning that why I am doing this. So this is all the three. When these are all three combined, then there is a possibility that fraud can be occurred or happened. Now then comes the point of internal control, how we can control or develop an environment within the organization so that the chances of fraud is going to get less. We cannot eliminate 100%, but we want to develop such systems in our organization that the frauds are at the minimum level or as not occurred as much as possible. The primary way fraud and errors are: number one is to prevent it. Develop a system in such a way that the opportunity for doing a fraud is eliminated maximum. Then detect it. Like, if it is not prevented, because you know that these evil minds are developing new and new ways to cheat others. So for that reason, if it is not prevented because of any reason, then it should be detected very quickly, very after the incidence of that fraud. It should be identified or detected very quickly. Or it's not going to be, sometimes it happens that the fraud happened about a 10 years or a 5 years or a 2 years back, and then the corporation or the firm realized that, okay, why this has happened. That's the point, that it should be detected more quickly. And then there is a way that how we can correct it in the future so that it's not going to happen again. And what has happened, we have to correct it, or we have to compensate it. So by this way, these are the primary ways: prevent, detect, and correct. Management and the board of directors implement a plan of organization. So you see, whenever we talk about any organization, we look at their organizational structure. The way that organization is structured, like there is a CEO, there is a deputy CEO or a CFO, and then down the line we have a directors, and then deputy directors, and then we have a managers and sub managers or assistant managers, and then we have a worker. So this is normal. What I explained you, that this is a normal structure for any corporation. So if the corporation is structured very carefully and crafted in a way that checks and balances are there, then the elimination of a fraud is more possible. Otherwise, if the checks and balances are not there, and the clear line of responsibility and clear line of authorization and rectification is not there, then the possibility of frauds will increase. So systems and procedures. So every thing the organizations are doing, they have to develop a policy, and policy should be implemented across the board without any exceptions. So by this way, the system is going to improve in such a way that the frauds can be eliminated. What are the objectives of creating internal control? Safeguard assets. That's the most the foremost objective of any internal control is to safeguard or protect the assets of the corporation. Encourage employees to follow policy. Internal control system is that if there is a policy existing in the organization regarding any matter, then the organization should follow it without any exception, or without any genuine reason, or without any approval from an appropriate authority levels to deviate from the policy. Promote operational efficiency, and by this way, internal control promotes operational efficiency in the means that everyone is doing his job, which he knows very clearly what his job is, what is his responsibilities, and what are his duties. Ensure accurate, reliable records. So from accounting perspective, if there is an effective internal control, the records and the data we are generating for accounting purposes is reliable, it's trustworthy, and by this way we can say that whatever we are presenting in our financial statements are true. Comply with the legal requirements, and definitely whenever an organization is operating in any country, so they have to follow the rule of the land. So comply with the legal requirements of the country in which the organization is operating. So internal control is working like a shield or a firewall. In computers, we build up the firewalls or protective walls so that the intruders cannot come in. So what is the objective? This green block is creating an internal control. So what is the benefit of this internal control is that they're protecting the company asset, which reflects here as a gold bars, from fraud. Definitely the wastage, that is also one of the reason for the loss of for any company, and inefficiency. So waste, inefficiency, and fraud is going to be eliminated if we implement a good internal control system. Components of internal control is control environment. That's one of the requirement, that we create an environment in an organization that everyone knows that if I do something, it should be identified, it should be detected. So everyone is very clear in his mind that they have to follow the rules. Risk assessments, so the organizations do their risk assessments, like what is their risk, and the risk assessments are of a various levels, like a macro level or a micro level, and within the internal risk assessments as well. Information system, develop a system of information and communication among the employees in such a way that that there is no miscommunication, as well as there is no deadlocks, or there is no that no one is know what is happening or at what level they need approval or authorization. So that's a very clear control procedures. They have to develop the policies through policies and monitoring of control. So these are the basic corner stones or landmarks for the internal control system. Now, when we are saying control environment, we mean to say that tone at the top, start with the owner and top managers act ethically. So if employees observe that our employer is working unethically, so definitely they are not following any ethical standards for their own work as well. So that's very important, that if you set an example from the top, that we have to follow the rules, regulations, and all the policies what we developed without any discrimination, without any exception. So in that case, we give the message or a signal to all the employees that we are acting ethically, and we want that everyone should act ethically. Key ingredients is develop a corporate code of ethics, and everyone should know that what is the code of ethics for a particular organization in which he or she is working. Identify business risks, establish procedure to deal with the risks. So these are the ways that they can. Information system, how accounting information enters and exits the company. System must capture, process, and report transactions accurately without any exaggeration or without any undercut. Control procedures, built-in control environment and information system, how companies meet 5 objectives of internal control. Monitoring controls, prohibit one employees or a group from processing a transaction completely, because by this way there is no check and balance. So it should be arranged in such a way that someone's work is authorized by someone else, so that there is no misappropriation or misrepresentation. Programs control into computerized system, hired auditors to monitor controls, and auditors can be internal as well as external. Internal auditors, their job is mostly to safeguard and correct the problems, and external test for the outside to ensure accounting records are accurate. So this is all a theoretical portion of this chapter. What we discuss is that what is fraud and how we can develop an internal control in a system to safeguard our assets from fraud, wastage, or inefficiency. So we will discuss the remaining things in our part